Today, I want to walk you through one of the misconceptions about investing in a Dollar General, and it's how the lease term directly impacts the cap rate, the asking price, and the risk. I'm going to give you 3 real current examples to make this concrete. And here's the biggest idea up front. Cap rate is not just about yield. We're going to talk about cap rate and market pricing and the risk and the lease term, and that's kind of the biggest input. So let me explain. All 3 of these properties that I'm analyzing look similar. They're the same tenant. They're all Dollar General. They all have the same lease structure. They started out with a 15-year lease, and now they're at various stages of the life of the lease. And they're in the same general geographic location. Built in the same era, but interestingly, they are all trading at different cap rates because of where they set in the lease term and the timeline of the lease renewal. So example number 1 is in Canyon Lake, Texas. This property is priced around a 6.5% cap rate, and it has roughly 6 years remaining on the lease term. The annual rent is under just $100,000 because there's still meaningful term left on the lease. So buyers are willing to pay a lower cap rate because they're buying time. Example number 2 is in Liberty, Texas. This property is closer to a 7% cap rate. Same tenant, similar lease terms, slightly lower rent, and the reason is the higher cap rate reflects a thinner buyer pool and thinner buyer demand as the term shortens and the clock becomes more visible. Now, I happen to know some people that are interested in this particular store, and for them, they own other Dollar Generals already in their portfolio, so they're pretty comfortable with how Dollar General operates, and it makes sense for them. Example number 3, Pointblank, Texas. This property is also around a 7% cap rate, and again, same structure, same tenant, same rent. The difference is not the building. The difference is how the buyers price the next decision point in the lease, and here's the pattern. As the lease term declines, the cap rate rises, not just because the building has changed. Actually, nothing about the building has changed, and not because Dollar General has changed. Dollar General has been around since the early 1930s, but it's because now the buyer is now closer to a renewal decision that they do not control. Dollar General controls whether they want to renew that lease, not the buyer. So this is how I underwrite these deals. If there are 10 years or more left on the lease, the buyer focuses on yield and stability. If there's 6 to 8 years left, the buyers start asking harder questions. And if there's 5 years or less, the market demands a discount. That discount usually shows up as a higher cap rate and a lower price. Cap rate and price inverse. So as the cap rate goes up, the price goes down. This is why 2 Dollar Generals can look identical and trade very differently. When you read an offering memorandum or a marketing package, focus on 3 key numbers. Number 1, what are the years remaining on the lease? Number 2, what's the current annual rent? And number 3, what is the cap rate today? Those 3 numbers will tell you how the market is thinking. And here's the most important takeaway. You cannot control whether Dollar General renews that lease, but you can control how much term you buy and what price you pay for that risk. That's the entire game. If you want to help applying this to real decisions, I've created a guide called How to Buy Triple Net Properties. If you're watching this YouTube, it's linked in the description. If you're listening on a podcast, go to my website, eugenecommercial.com, and send me a quick message. I'll send you the PDF, download the PDF, review it, and then schedule a free 15-minute discovery call with me. We'll walk through your goals and decide what's right for you, what's the level of ideal term that you're looking for, and what risk fits you. If this was helpful, please hit the subscribe button and give me a thumbs up. It helps the algorithm and it helps more investors like you find our great content. Thank you for watching, and I'll see you in the next one.